Especially in today's trading session, Ceat is one stock that should come up for you. They've reported a loss for the first time at about 12 crores versus a profit of about 12 crores last quarter. Anant Goenka, the Deputy Managing Director of Ceat, joins us now to talk about that. Anant, very disappointing performance this time around. Just take us through the quarterly numbers.
That's right. We reported a net sale of 978 crores against last year's sale of 772 crores. That's a growth of about 23% over last quarter. In terms of PBT, our PBT has come down from about 20 crores last year to about negative 17 crores. This is primarily because of the raw material cost impact that has hit us. Raw material prices have gone up by about 40% year-on-year basis, and although we passed on a price increase of about 20% nearly over the year, it's not been sufficient to combat the kind of cost push that we are facing. So it's primarily just one reason that has resulted in this kind of performance, and that is because of the raw material cost push led by rubber primarily.
Anant, afternoon. How sustained do you see this raw material pressure being? Do you expect it to spill over for a few more quarters, or have you seen the first signs of some decline or easing off pressures in the current quarter?
No, I think rubber prices will continue to remain at current levels for the next 2 to 3 months. This is a time where production is at the lowest and demand is on the highest. So until July, August, we expect rubber prices to remain at current levels. After that, we can see some softening of rubber prices.
How many more price hikes do you think you can cough up and pass on, Anant?
Yes, I think that is really the need of the hour. Just about 3 to 4 days ago, we managed to take a price increase of about 4 to 5%, and we need to take another large price increase sometime by end of May or early June, and we would be looking at something like a similar quantum of price increase.
Are you facing any resistance from the OEMs, Anant? Because for the auto companies, their margins are under pressure as well. Are you facing some resistance? I mean, at least in the replacement market, you may all be able to pass it down, but at the OEM level?
Yeah, at the OEM, for us, the percentage of sale of OEM is barely about 15% of our sales. We, of course, generally it's always a game of negotiation with them, but we are able to get some amount of price increase, and we hope that we are able to pass on most of that price increase to the OEMs, because for us too, OEM margins are generally lower than replacement, so we need to pass on as much of the cost push to the OEMs, otherwise profitability there would suffer substantially.
Cheaper amount of Chinese imports was the other problem that tire makers like yourself had. What is the increase that you've seen in the amount of imports, and how much do you expect it to be going forward?
The government took some good action last year in terms of imposing anti-dumping duties, and after that we've seen some slowdown in Chinese imports. Chinese tires generally are low-cost tires, their quality is not up to the mark, and with radialization happening in the truck tire industry, I think the Chinese threat would go lower and lower. That's because the Chinese tires radial tires generally require post-sale service, so they need some amount of retreading, etc. Chinese companies don't offer such services, after sales service, etc., and so their impact or growth potential would be limited. Also, with the BIS kind of requirement that is coming in, where all tires need to be BIS marked, that too would be a barrier to entry for Chinese tires. So I see the threat of Chinese tires reducing over time.
Thanks, Anand, for joining in today. That's Ceat, still down about 7%. Results obviously have not gone down well with the street. And the Nifty 2 is coming off now, 5689, virtually at the lows of the day.